Let's turn to the world's biggest humanitarian crisis, the civil war in Sudan. As we speak at the moment, nearly 9 million people have been displaced within the country. Another 3 million have fled to neighboring states. That includes Chad, Ethiopia, Uganda, Egypt and South Sudan. Now, the United Nations reported a funding gap of nearly $900 million in 2024. The equivalent figure at the moment for 2025 is close to $4 billion. These funding constraints notwithstanding, one other way of looking at camps and communities hosting refugees and displaced persons is to see them as places where SMEs can potentially grow. But for that growth to happen, you need credit, and this is often an underserved market for small-scale credit. To understand why, a little earlier I spoke to William Ngabonziza. He's a country director in South Sudan at the microlender Inkomoko. I started our conversation by asking him how the organization manages the KYC process to verify the client's identity when lending to forcibly displaced persons.
The traditional lending is not working because the banks demand a lot. The KYC is difficult. So working with the refugee agencies and working with the government, so we try to ensure that refugees are supported to be trusted. Then registering them, giving them cards so that they are recognized, but also working with these banks, those finance service providers, telecoms, so that they are given recommendations by us in Inkomoko and the refugee agencies so that they are trusted. So it takes time, or sometimes, like for example, an account which is open for a refugee, you will find that it's a low profile account. It's not an account that is open for the citizen who has everything, who has a national identity. So you find that a refugee account has limitations. He's able to save, to withdraw, he's able to deposit, but there are some others for example, he might not be given a Visa card.
What does a typical Inkomoko loan look like? Walk us through some of the headline numbers. How much on average are you lending out? What's the tenor of the loan, the fees, interest rates, and so on?
Inkomoko loans, they are micro and smalls, as you mentioned it. And for example, if we are starting working with a refugee, we start with $500. These are the small loans we are giving to women and to youth who are doing small and micro businesses, but they grow with us. So our loans are from that amount up to $50,000. So we have many products of loans. So like with the conventional loans, where a loan is paid by 10% per annum as an interest, but also we have the Sharia product with the Muslim community from Sudan, for example, from Somalia region, because we're in the Dab and here in South Sudan. So we have a product where we give them the principal, they return the principals as per the agreement. So these are the loans, and let me tell you, we have invested so far since the inception of Inkomoko $40 million, and the repayment rate is 97%.
Is there any financial institution that's providing a risk-sharing facility or backstopping the $40 million in lending that we're talking about at the moment, or is the risk entirely of lending to these individuals? Is that that entire risk is just borne by Inkomoko alone?
No, there are other organizations doing the same and perhaps giving grants, but because Inkomoko is transforming the refugee landscape, how do we transform this refugee landscape? So because we want to show that refugee entrepreneurs, they're investable. So we should change the perception of seeing refugees as people who are vulnerable, who are just there to be given. So this change is where now we are investing in them.
In theory, right? In theory, banks could, on paper, they could be meeting this need, right, of lending to individuals in refugee camps and forcibly displaced persons. But for the most part, they don't. At least in our corner of East Africa, for all the research that I did, I only found one bank that actually tried to sort of get into that space, and that was some years ago. What is it about lending in this space that makes it unattractive to banks?
The perception is the problem, because refugees, they are in the displacement, and banks have the belief that it's not a final destination for them. So they are here temporarily. Anytime in their country of origin things will go better, they return back. So that's the risk they don't want to carry. But for us, we want to show them that by working with these people, by trusting them, by showing them what you are giving them, they also trust you. They also tell you the truth. For example, let's say in Kenya, they are to be resettled. You understand? To be resettled, UNHCR, the refugee agency, is taking them to the third country that has accepted to accommodate them. And because they have a loan and they have contractual agreements with Inkomoko, they talk to our business development advisors there. Yes, we have been selected for the resettlement, and our loans period was 6 months. So we are ready to pay you, or we are handing over this loan to my brother who will continue doing the same business because he didn't get a chance to go to Norway, to US, to any other country. So we'll continue and he will proceed. And then we transfer that loan to the brother or to the sister, but also sometimes even when he doesn't have someone to transfer this, he pays or she pays, and then she moves it.